A client recently asked me this question: Vincent, should I delay my investment because of Trump's return and with all his news of tariffs and trade wars with other countries? It is a great question, and I totally understand why investors are worried. Tariffs, trade tension, political issues, all these are news that can shake the market. And it is pretty similar during Donald Trump's first term, which he also slapped other countries with tariffs, creating tension with other countries in the Middle East or North Korea, and also China. His criticism of Fed and the high interest rate environment, non-stop tweets that can shift the market either way, and also his impeachment issues. And he is always constantly on the news, which suddenly makes this much more apparent to a lot of people. So I think it is this uncertainty creating a lot of tension and fear among investors, which you don't really see it during Biden's era. So it comes down to this: should you change your investment strategy because of Trump's presidency? Let's break it down. Fundamentally, why people are worried. Whenever there is a change of administration, there is always a lot of uncertainties, especially during this period of time where there is a lot of international tension. So investors tend to be fearful, delay their decisions, trying to avoid potential downturn. And I think it is totally understandable. But let's take a look at some data. When Trump was first elected during the 2016-2017 period, initially market panicked and the market dipped when news that Trump has won the election. However, market subsequently rebounded. And if you take a look at this chart, you can't really even notice the dip. And during Donald Trump's first term, he also started a trade war with China in the 2018 period. Tension was high and you can see the news every day on the newspaper. Manufacturing companies took a hit due to higher costs. Tech companies also suffered. Supply chains were disrupted. And during the term of 2017 to 2021, there's also the COVID period, which is also a very volatile time. But here's the thing: despite all of this, the S&P 500 still grew by 63% during Donald Trump's 4 years period. So if I use this website to do up the calculation of the S&P 500 returns with dividend reinvested during the 4 years period, the stock market actually averages about 15% per year, which isn't a very shabby return. In fact, I would say that it is pretty fantastic. So what is the lesson here? Even with the trade tariffs, the tension, and the non-stop tweets, market long-term trends still remain upwards because the stock market still follow this fundamental rule. As long market expand, companies' revenue are growing, stock prices tend to lean towards the growing trend. So let us take a step back and see if presidents really control the stock market. It might seem like they do, but however, if we zoom out and look at the big picture and pull out the data from 1926 until now, the US has been under both Republican and Democrat presidents. Regardless who's been in the office, the annualized return of the US stock market from 1926 until now averages around 10% per year. So short-term political events does not really affect long-term market performance. However, there are really sectors in the market that does better or worse during each president's period in the office due to the bills and acts that the president is leaning towards too. So during Trump's first term, certain sectors struggled and some thrived, and some manufacturing companies initially struggled due to the tariffs leading to higher costs, but they adapted. And even tech companies, some were affected by the tariffs, continued to innovate and produce great returns for the investors. So investors who pull out during the period where tariffs were announced and there's a lot of uncertainties, they miss out on the massive gains when the market bounced back. So coming back to the main question, should you delay investing because Donald Trump right now is the president? And the answer is no. You shouldn't delay your investing just due to Donald Trump being the president, with all the facts and data that I've shared with you earlier, which led us to this conclusion that short-term political events does not affect long-term market stock performance. But this also does not mean that you should ignore everything and just keep on investing. There can be some adjustment being made to your strategies to manage risks. So here are some ideas that you can use. The first idea is to diversify your portfolio. You might not want to just put all your money into a single sector, which might be affected by tariffs, such as manufacturing or retail goods. And there can be money invested in different sectors such as healthcare, utilities for diversification purposes. The second thing that you can do is to revisit your investment time horizon. There's no way that we can predict what happens in the short term, just like nobody can predict what happened during the COVID period. So if you shift your perspective from investing for just a short period of time to you will be investing for 10 to 20 or 30 years, short-term day-to-day news cycle will not affect your long-term investment goal. The third thing that you can do is to always remember to embrace market volatility, because only in volatile times you'll be able to invest in great companies at a great price. And recently we have been past this two period of time, which is in the year 2020 when COVID crisis hit, the market rebounded within 1 month. And year 2022 when interest rate hike happened aggressively and stock market crashed. Whoever that took the initiative to invest during that period of time would have already made a lot of money. So shifting your perspective on market volatility, thinking of any volatility that is created by whoever is in the office will lead to opportunities, but you have to keep a lookout for it. And the fourth thing that you can do lastly is to ensure that you always have cash. Don't fully invest 100% of your portfolio. Keep some spare cash around and continue building this war chest. And when the time arises, when opportunities come, that is the period of time that you want to deploy your war chest to acquire more assets on the cheap. So my conclusion comes to this: the stock market is resilient. President come and go, policy changes will keep on happening, and the worst thing that an investor could do is to be affected by all this news and make emotional decisions that can be detrimental to their investment portfolio. So instead of asking should you delay or stop investing due to Trump's presidency, I think a better question to ask is how can I structure my investment portfolio to weather short-term volatility and yet enjoy long-term growth? I think that would be a better question to ask. If you are still unsure about how to navigate this situation, drop me a question in the comment section below. I would love to hear the questions and I will do my best to answer. And if you found this video helpful, do hit on the like and subscribe button so that you can get recommended to more videos like this. And I will see you in the next video.